Good evening, folks. Welcome to TopGunStockTrading.com. Let's get right into the action today. Today, market S&P was up a buck 88 or 1.06%. Just like we talked about yesterday. Yesterday we closed right on this level of our line drawn in here, 177.32. We actually closed at 177.35. So 3 cents above that line. I said we are going to wait for confirmation below that to change our stance on the market, but until then we were positive and we're still expecting this bounce, and that's exactly what we got today. We got over or almost a $2 bounce on the S&P, and again I reiterate we're looking for this red bar high here of 181.66 to come into play, and we're looking for that level or that price action to match up with a time factor. Uh, uh, as well as this pattern here is this inside red bar to give us that three-dimensional trade on this market to signal us to go short on this market. But until then, we'll just wait and see and watch the market continue to do whatever it wants to do. Now, an interesting thing to note is, was there any new news today that would make this market go up 2 points? Yesterday, the sky was falling. China was GDP and their PMI was horrible. The emerging market currencies were getting trashed. Turkey, as well as Argentina, South Africa even had to raise their interest rates. So the emerging market currency crisis was beginning to boil. So this market looked like it was doomed for failure. But we at Top Gun Stock Trading know that we don't let emotions or the news dictate our moves. We looked at the charts to manage our next move on it. We said that this market was still in for a bounce, still on the positive side, unless it confirmed below this level, which it did not. So we're looking for that bounce, and then today was exactly what we got. Again, we're looking for a continued upside. We're looking for that pattern, the time factor, and that the price to come in to set up the basically the worlds will align at that point for us to get off a short. Now, as you can see, all of our as we came into that level, we covered our shorts like IBB, which is a biotech ETF. We said we were going to cover our short right here at 238.77. We didn't really maximize our profits, but you never really do. But you don't really want to get too greedy with it. It went down as low as 234.15, so we lost $4 worth of movement, but no big deal. But as you can see, it bounced around here for the last couple of days, and today it jumped over $7 or almost 3% up. So this stock or equity ETF is coming into a nice level right now. We're going to let this thing let it do its thing until the market or the S&P gets up to our short level, which will signal us to start beginning to ease into some short positions. But until then, we'll let the IBB run. Same thing with WIN. When we shorted back here at the 205 level, we took some profits down here at the 198 level, 199 level. It continued down further, and now it's starting to march back up. Let me get rid of this Fibonacci retrace for you. So it's starting to march back up. Again, we'll wait for the S&P to get to our level, and we'll start to ease into some shorts, especially the WIN, IBB are two of the ones that I'm eyeing up to looking at to short when the S&P gets to that level. So, like I said before, we'll wait for the three-dimensional or the three aspects of our trading to signal either to go long or go short. With only one of those dimensions, we definitely don't take that trade because it's a lower percentage trade. Again, we're looking for a 70 to 80% success rate. And using the three-dimensional trading technique, and here at Top Gun Trading, we achieve that 70 to 80%. Let's jump right into oil. Oil had a plus 22-cent day. You can see it gapped up here. You can see my line here drawn in. It gapped up and then didn't really sell off, but just kind of floated down the rest of the day. So it opened up at 35.11 and decreased down 16 cents. So no big deal there, but you can see it jumped up there. Again, I'm not looking to short oil until up into the Pierce 36 level. And again, we're still looking for the pattern as well as a time factor and to couple up with that price factor there in order to again get that 3D trade out. But until then, we'll just kind of monitor the USO and see how it's doing. Likewise with GLD, the gold got hit today. with a move up in the dollar. Gold and the dollar usually move inverse to one another. As the dollar gets stronger, the price of gold will go down, and that's because, well, it's just fundamentally the value of the dollar is directly correlated to the ounce of the price of gold. Usually, and I say usually because some other factors may take higher precedence or higher priority during certain other times, i.e., the fear factor at certain times in the market when the market is falling. The fear factor may have better or greater influence on the price of gold than the value of the dollar. So they're not always correlated, but for the most part, they are. So the dollar was up today, and gold sold off 2.2%. So what's this telling me? Doesn't really kind of messes up our pattern here because I was talking about what I was looking for in the last couple of videos. Is this move up with some sideways consolidation? What I didn't want to see is a straight down move into our level, into our gap fill level, and that's exactly what we got, is a straight down sell-off there. Not really sell-off, but some sell-side action there. So if this gold continues on what it does and actually puts in some type of a bearish action, let me get rid of this other action here for you so you can see what I'm talking about. One line, and get rid of this for you. One second. So go. You see this down move, and if we get some sideways action slightly up, that's a micro bearish pattern, and we'll hold off on gold. So basically, we're waiting for a pattern to form on gold so we can go long. You can see it came up right into this level right here at this double top here, into this level, and then sold off, pierced the 122 level, and then dropped down today. Was that a good level to short? No, it didn't give us a pattern, didn't give us a time factor, it did give us a price point, but didn't give us the other two dimensions in that trade. So it wasn't a good percentage trade, although it would have worked out. Again, we play the percentages here at TopGunStockTrading.com, and that just wasn't a high enough percentage. Now remember, as a experienced trader, a professional trader, you're basically an odds maker. So yes, the long shot horse may win the race, 1 out of every 100 times, but that doesn't mean you're going to bet the long shot every time, because ultimately you're going to be a loser. You're going to lose money. Likewise, in trading, you don't bet just because you're coming into a price point here. You're not going to put off short on just because of that. You need the other two dimensions in order to solidify or increase your odds of having that successful trade. And again, on gold, we didn't have it. We were actually looking for a sideways consolidation, and I told you I didn't want that. I wanted a sideways consolidation into this gap fill level, not a straight down move, and we got the straight down move. So again, I didn't take the trade. And we'll see what gold does over the next couple of days to weeks to see if it presents a pattern, a price level, and a time factor to us. Right now, it looks pretty sloppy, jumping up and down there. So we'll hold off and wait on the gold trade. J.C. Penney's. I'm in J.C. Penney's from 655. Had a pretty ugly day today, down 8%. Again, how do you mitigate emotions jumping in and just selling this to get out of it? Is you mitigate your position size. So I mitigated position size. Know this was a volatile stock and likely to go down. It's one of the most hated stocks on Wall Street right now. There's even an article came out yesterday saying how bad J.C. Penney's, how bad a shape they were in. So usually when stocks are hated on Wall Street, I start to get interested in them. I pick my level, my time, and my three-dimensional factors there, and I will buy the stock when it's the most hated. Today it went down 8%. I've mitigated my position size, so I'm not really in that all that bad a shape. It was just a small position, and J.C. Penney's here, so we'll see how that works. See how that works out for us. We'll maintain our position, and see if that JCPenney can't rally. I believe by the end of the year, JCPenney's will be definitely higher than it is right now, if not double or triple what it is right now, i.e. up to $15, $16 level by the end of the year. We'll see how it works out. Again, I'm just going to stick this in my back pocket and roll with it. We did stop out of the SSO. I said I would put an in the money stop on this, and that's what I did. So I made a little bit of money. Didn't make as much as I could have if I had stayed in it, but the market, it is what it is. I stayed to my trading plan there and stopped out slightly in the money. So no harm, no foul. But the market do expect a bounce like we talked about in the last couple of days. So this bounce is no surprise to us here at TopGunStockTrading.com. All right, just as a quick recap, we're looking here. Expect a continued bounce into, especially tomorrow being Friday, probably a low volume float into the weekend, to the Super Bowl weekend. Again, the Fed wants the market up into this weekend, so people spend money. So we're definitely, I expect a positive bias on Friday, and I expect the market to close up tomorrow with light volume. Mondays are also usually light volume, especially Super Bowl weekend, when most traders will either come in late or not come in at all. So Monday will probably be light volume as well, and expect a light volume float too. So into next week, Tuesday, Wednesday, Thursday, slight positive bias on this market as long as we're above this 177.32 and below this red bar high of 181.66. If we're in these two trading ranges, let's see, it's going to be about right here. That's not going to work. Bad choice. Let me fix this for you. So what I'm really looking for is a price level here, about right there. So if we're somewhere between these two levels, the red bar high and this 177.32, again, if it's on the lower end, expect to go up. If it's up at the top end, we'll expect to go down. And again, we'll look for a three-dimensional trade to get off on the spiders here at 181.66. All right, folks, that's all I have for today. One thing to note: Amazon had earnings this afternoon. It's been all around the chart. It's been as low as 350-ish and change, and all the way up to, I believe it closed the aftermarket at 385 and some change. So Amazon will be a stock to watch tomorrow. We'll see how that performs. Google had the earnings as well. It's trading up close to $1,200, so that may be a good stock tomorrow to maybe day trade on the short side. We'll see how that goes. It appears that 1,200 is looking like a good short on Google. Again, we'll reevaluate that in the morning. All right, folks, that's all I have. We'll see you on the charts tomorrow. Have a good night.